Good morning, good morning, good morning, good morning. Alrighty. Last week we positioned for upside and we got that upside. This week, Bitcoin is back up at resistance. Interesting weekly candle close. Bitcoin positioning itself in a way now where we either make our way all the way up to $32,000 right over here, or a potential downside move to 20,300, which, by the way, would imply further downside, in my opinion, to new lows. So Bitcoin is in a very precarious situation at the moment, a very interesting situation, a very exciting situation. And in today's video, I'm going to tell you guys how I'm positioning for it, because Bitcoin is doing something over here that I recognize ever so deeply, and I'm getting really excited. So let's go ahead and get started with the dashboard analysis, because if you guys do remember, this was the foundation for why we set up in a bullish way last week, right? Today, by the way, guys, I had a bunch of other slides set up for you guys. I was going to talk about different things, but the way the weekly close made me go, you know what? I got to throw all of that away, and I really got to talk about this. I got to set the stage for everyone again. I got to systematically go through all of these charts on the high time frames so people get their mind straight as to how Bitcoin may move in the coming weeks, because I think everyone is getting caught up in the lower time frames, even though I am telling you guys over and over again that, hey guys, it's the high time frames where the trades are. It's in the lower to mid time frames where you capitalize on the profits, but it's the high time frames where you set up for your positioning. And in today's video, you're going to see exactly how that helped us and how it's going to help us in the future, right? So here we have the 4 hour, the 12 hour, and the daily. And if you guys remember, last week, the 4 hour, the 12 hour, and the daily all looked like garbage, right? The 4 hour was short, the 12 hour was neutral, the daily was short, and the volatility was all over the freaking place, right? But we said that, hey, the weekly is still long. And because the weekly is still long, we are going to be using all of that bearish volatility on the lower to mid time frames to our advantage. And why is that, guys? Why is that? It's because when the weekly is long and you have an impulsive move, right? Because of, well, the weekly turned long because of the impulsive move. When you have that impulsive move on the weekly and your lower time frames go into consolidation, you have a structure that inevitably turns into something that looks like a bull flag. And what we have to do as mango traders, as trend traders, is hunt for that higher low, right? When does this bull flag stop? Does it stop here or does it keep going, right? We don't know. That's the difficulty of being a trend trader, because you don't know when that downtrend on the lower to mid time frame stops. Well, we said that, hey, we are going to use our higher time frames as a guide. And where did we hunt for that higher low on the weekly? Well, the monthly 10 SMA, right? I talked about it for freaking 2 months. Keep an eye on the monthly 10 SMA. Keep an eye on the monthly 10 SMA. We talked about it through all of Jan. Then we closed the month of Jan, and I did a separate video on the monthly 10 SMA. And then finally, we had that big move down on over to the monthly 10 SMA, and that's precisely where we ended up bouncing, right? And we talked about how if we do get that bounce, it's going to end up looking like a bull flag, right? At the time, it did not look like a bull flag, right? At the time, this picture here, guys, was an ugly picture. Now, what does it look like to you guys? Let's go ahead and draw it out for you guys, okay? We have our pole, and we have our bull flag right over there. And now we have a break of the bull flag, right? So we have a low, we have your high, you have your higher low, and you have your higher high now, right? This is officially, guys, an uptrend. This is officially an uptrend on the weekly time frame. There's no more arguing that. However, there is resistance right over here, coming in from the candles all the way back in July to August. These weekly candle closes have still not been claimed by Bitcoin. These candles closed at 24,320. Last week's candle, well, the one we just closed ever so slightly underneath at 24,296. Just by around $25. Bitcoin refused to give the easy trade to the bulls. And let me tell you something, guys, from experience. This is precisely what we want to see. Believe it or not, just last night, in fact, Krish and I were talking about charts, and I'd said, the perfect candle close is actually going to be ever so slightly underneath. Ever so slightly underneath. And in fact, I had said that if we get a candle close above, that's when I'm going to be far more cautious. And you guys might be wondering, what? Why? If we get a candle close above, that's a good thing, Sean. Well, yeah, usually that would be a good thing on almost every other time frame. But the weekly time frames on Bitcoin tend to be the most insidious time frames. They never give you what you want. Okay, in one way or the other, it's going to be insidious. It's either going to subtly close in a way that everyone misses it, like on our ascending triangle over here, where nobody was talking about the fact that Bitcoin just closed a weekly candle breaking an ascending triangle. Nobody talked about it because nobody was watching it, nobody expected it, and Bitcoin did it, and Bitcoin flew right after. Or it will close way above the level, right? So let's say you have your level here, Bitcoin will close something like this, right? And we're going to show this too. Bitcoin did that as well. Or Bitcoin will do something like this, where you have your level and it closes ever so slightly, even though you have a wick above. And then it just keeps going. The weekly candles are the most insidious, right? If you get something like this, where you close ever so slightly above, you're most likely going to get a dump to the downside. I hate it. Guys, I hate it just as much as you guys do, right? I would love my trades to be easy, but the weeklies have trapped me more times than not. So be very, very careful on the weekly time frames. Expect some insidious behavior, which is why we love our 4-day time frame, right? We love our 4-day time frame. That's where we catch the easy trades, and you guys are going to see that too. Okay, so now with that out of the way, let's set the stage. Remember, the weekly has closed ever so slightly under a key level. Around 2 to 3 weeks ago, I had said that, hey guys, I am reducing my positions, right? We said we are reducing risk around 2 to 3 weeks ago. Then last week, right, 1 week ago, I said, hey guys, I'm adding back all of my altcoin risk, right, into this dip, right, into the dip that we got over here, into the monthly 10 SMA. We started adding altcoin risk, right? So we added risk over here. Okay, we reduced, not red, we reduced 2 to 3 weeks ago, and we added risk. Now, why did we reduce risk 2 to 3 weeks ago? Well, a couple of reasons. The first reason being that we had come against major weekly resistance, right? We had the weekly 200 here, we had this major level over here, etc., etc. But also on the dashboard, we had like around 34 days of the daily time frame being long. We had 35 days of the 12-hour time frame being long. The daily and the 12-hour, the mid-time frames were just way, way overextended in their duration of their trend, right? They had stayed long for way too long, and it was about time that they go into consolidation, considering that we had resistance overhead on the higher time frames as well, right? So the combined effect of the two allowed me to go like, you know what, it's time to reduce. Remember, I never take all of my risk out ever, right? Because you don't know, you never know. We're never certain of anything. And I have felt very, very stupid in the past, where I have taken profits on a trade just because of that 10x, right? All I had to do was leave just 10% of it in, right? Because that thing went on to do another 10x. Think about it, 10x on top of a 10x. So it actually did a 100x, and I missed out on that entire 10x run after that. So I've learned the hard way to always leave a portion of my trade in. So let's go ahead and list the reasons as to why we reduce risk, right? Why did we reduce risk 2 to 3 weeks ago? One, we had hit our initial target, right? We had a target one of around $24,000 on Bitcoin, and since Bitcoin hit that target, that was good enough reason to start thinking about taking profits on our altcoins. Two, the daily trend was long for a good 35 plus days, right? That was a overextended duration on the daily and the 12-hour staying long. So it was about time that goes into consolidation, okay? And three, we were at resistance. So this was the picture last week. Now we have to ask ourselves, is this the same picture? Well, we no longer have this, right? Because now the daily, we can scroll up and look at this. The daily has been long for only around 3.3 days. So we have a new fresh long trend on the daily. So this has switched from 35 days to 3 days, right? So this is fresh. The resistance too has kind of changed. It has held, right? We are still at the same resistance level. However, we now have a bull flag up against resistance, right? And you guys know my philosophy on an uptrend. In an uptrend, you look for consolidation underneath resistance because you're expecting resistance levels to break towards the upside in uptrends. Same story on a downtrend. When you see consolidations on against a support level, you expect that to break towards the downside, right? Trends break resistance and support levels in the direction of the trend. So if your trend is up, you expect resistances to break. If your trend is down, you expect supports to break. At the moment, we have established very, very, very clearly that the weekly is in an uptrend. So you're going to expect the weekly resistance levels to break towards the upside, especially now since we have a bull flag right underneath it that has triggered its move towards the upside. So this picture has changed as well as this picture has changed. Well, what about this picture? Well, we did hit our target 1, but we always had a target 2, right? If you guys think all the way back to like what, December, somewhere around mid-December, we were already talking about how we have a target 1 and target 2, right? This is a screenshot, by the way, from all the way back then. We were talking about the structure of our cascading pattern, our falling channel with our ascending triangle underneath. And if that ascending triangle broke, it would have led to a cascading pattern play where the falling wedge would have also broken to the upside, leading to 2 targets. Target 1 of the cascading pattern being $24,000 to $25,000, and target 2 is a higher level, higher picture, equilibrium move of the Ichimoku and Fibonacci levels coming in at around $35,000 to $42,000, right? Well, it's all playing out now, right? So going back to our list, yes, we did have a target 1 that did hit, but we also had a target 2 that we were always going to try to position for, right? We don't know if this is going to come into fruition yet, guys. Remember, we're taking things step by step, but those steps are now forming. Look at this bull flag over here. Yes, this chart is really messy, but look at how this is forming over here, guys. It is looking really beautiful. We have a weekly consolidation bull flag underneath a massive weekly level, and the bears are likely sweating at this point. Remember, we have bounced off the monthly 10 SMA, showing that the bulls are willing to bid. Okay, so I was going to talk about the cascading pattern on this slide over here, but since we already targeted it, let's go on over to the next slide. I do want to point out, I'm going to skip this too. Over here. We're going to talk directly on the Ichimoku over here. Okay, so what do we have over here? If you guys do remember, back all the way in around November to December, we talked about the equilibrium play. In fact, I spent a lot of time on the equilibrium play, where we essentially discussed how when you see price this far away from the cloud as well as the Kijun, price eventually snaps back towards the Kijun and then eventually towards the cloud, right? That's the equilibrium play. Simply put. There's a lot more to it, of course, but we're not going to go through all of that right now. Essentially, guys, we were looking for price to get back into equilibrium with the cloud as well as the Kijun, right? And the trigger for that was going to be a candle close above the weekly Tenkin. That was always the play, right? A candle close above the weekly Tenkin. Now, we did not get the perfect candle close. The perfect candle close would be your level like this and the candle closing ever so slightly above, right? But we already established upstairs how the weekly never ever gives us that, which is why you look either towards your 4-day time frame. Oh, by the way, we can actually look at the 4-day right over here. I wanted to discuss something else over here, but the 4-day, by the way, if you guys have the dynamic, and we were talking about this right throughout the bear market too, how the 4-day has been literally cheat codes on the dynamic. Every level had been respected, and we were looking for a close above the 4-day dynamic to initiate the big move towards the upside. Do not ever bet against the 4-day dynamic, guys, right? It has literally called this entire market, and yet again, the ever so slight close came on the 4-day time frame right over here, and the big move towards the upside. That being said, guys, even though you did not get the perfect weekly close on the Tenkin right over here, in hindsight now, you would have been just better off buying the weekly close, right? Even though it looked at the time so far away from the Tenkin. Now, price is sitting even further away from the Tenkin, right? Going back to what we were talking about, we said that the eventual play is a snap back into equilibrium, which would mean a move towards the Kijun, correct? Or towards the cloud. Well, the Kijun is a dynamic support and resistance level, and the Kijun is moving its way down. Currently, the Kijun is pointing towards $31,750, which would mean if price moves aggressively within the next week or so, that would be our next target. Okay, we'd be looking towards the Kijun. Since the Kijun has come underneath the cloud, the Kijun would be our next target until we clear the Kijun. At the time when we were talking about it, the Kijun was above the cloud. Right now, the Kijun is underneath the cloud, so we have to respect this level, guys. We have to respect it until we clear it. But does that mean that we have nothing to worry about over here? No, we already established that there's a horizontal right over there, right? Right, a major candle close. But there is more, okay? There's more. I'm going to go ahead, scroll down, and right over here, you guys can see that we have a massive juncture of EMA and MA resistance right over there. It is the 200 MA in red, the 200 EMA in purple, and we also have the 55 EMA in green. These are major moving averages, guys, that a lot of traders are looking at. A lot of traders have their eyes on this, and they will be reluctant to go on fully bullish until all of those levels are cleared. On top of that, you likely have bears who have also shorted that level or all of those levels right over there, right? So there's massive resistance over there. But we are bull flagging underneath it, right? So you have your horizontal resistance, you have your 55 EMA, you have your 200 EMA, you have your 200 MA. That's going to be key. That's going to be very key, this entire juncture here. Because once we clear that level, you're going to have the bulls gaining confidence, and you're going to have the bears closing their trades. I like how there's a B on both sides and a C on both sides. This isn't really visually helpful, but you guys get the idea. Okay, that's one really important piece of the puzzle that I do want to wrap up with, right? Remember, guys, I talked to you guys about how the Tenkan and the Kijun are dynamic support and resistance levels, right? Which means that if you consider your Kijun your resistance level that is dynamically moving, and your Tenkan, your support level that is dynamically moving, we can trade this just like your normal SNR levels as support and resistance, right? Yes, they're moving, but you can trade them dynamically. So as they move, you can treat this as support, treat that as resistance, and you can draw a midpoint between your support and your resistance. And guess where your midpoint comes in, guys? I have it drawn down for you guys right over here. It comes in exactly at that juncture. So not only are you going to have your trend traders flip long above this level and all of your bears close out their trades over this level. And remember, bears closing out their trades mean that they have to buy from the market, right? They have to essentially turn long, right? By closing out your short trades, you will have to buy on the long side. So you're going to have a lot of buy pressure coming in there from the trend traders and the bears, but you're also going to have your support and resistance traders at that point flipping as well, guys. That's going to be a key level there. You have your Ichimoku support and resistance traders and your moving average traders all flipping, provided the bulls flip that level though. If for whatever reason a hard rejection comes in over there, remember, we are looking for upside because of how the weekly has shaped itself, because of that bull flag, because now the daily is back in equilibrium on the dashboard as well. Remember, on the dashboard, before we were hesitant, we were reducing risk because we had 34 plus days of long moves, right? That was disequilibrium on your lower to mid time frames. But now that has reduced to only 3 days, right? So things have kind of come back into equilibrium with your weekly putting in a bull flag against all of these MAs and your EMAs, right? And we still have our target 2 at the back of our minds. We have not forgotten that target 2, right? And on top of that, we have bounce off the monthly 10 SMA, giving me that confidence. Okay, so with that, guys, I'm just going to go ahead and wrap up over here. I had multiple things I didn't want to talk about, but this video is getting a tad bit too long. I'm likely going to do a stream later tonight or early tomorrow. Keep an eye out for that. I want to answer questions that you guys may have. Let me know down in the comments down below whether you guys want it today or tomorrow, and I will schedule it accordingly. And remember, if you guys did enjoy the video, smash that like button, show Mango some love. I'll see you guys in the next one. Do it the Mango way, do it the easy way, do it the stress-free way.